Welcome back to Explain the Charts, everyone. Today, September 15th, 2025, we're doing an in-depth analysis of Google, Alphabet stock, which has seen some truly monumental shifts recently. Let's start by looking at the broader picture on the daily chart, spanning from May 2024 right up to the latest trading day. The most impactful news, which you can clearly see reflected in the price action, came on September 3rd, 2025, when Google secured a major win in its antitrust lawsuit against the U.S. Department of Justice. This ruling, which spared Google from having to divest its Chrome browser or Android OS, was characterized as a home run and removed a huge overhang for the stock. The market's reaction was swift and dramatic, with Alphabet shares soaring by 8 to 9%, adding hundreds of billions to its market capitalization. Now, let's narrow our focus on the daily chart to the period leading up to this recent surge, from mid-2025. We can observe a general upward trend for Google throughout July and August, indicating underlying bullish sentiment even before the antitrust news. This optimism was fueled, in part, by news from July 14, 2025, about Google DeepMind's strategic AI-focused hires, reinforcing investor confidence in the company's AI arms race position. Notice how the stock had found strong support around the $180 to $185 level in late July, consolidating before pushing higher. The volume around the September 3rd candle is exceptionally high, underscoring the market's strong reaction and the significance of the news. The stock gapped up massively from around $211 to $226 on September 3rd, leaving a substantial gap that now acts as a strong support zone. This gap represents a powerful psychological level for traders, indicating where buyers stepped in with immense force. Following this, Google continued its ascent, establishing new all-time highs and demonstrating robust bullish momentum. The old resistance levels quickly became new support, a classic technical pattern for a strong uptrend. However, there's also a recent report about a lawsuit from Penske Media over AI content use, which could introduce some long-term regulatory scrutiny and act as a headwind if it escalates. Let's zoom into the 1-hour chart to analyze the immediate aftermath of the September 3rd antitrust ruling. Here we clearly see the massive price gap, with trading opening significantly higher than the previous day's close. The candlestick for September 3rd, 1300 hours Universal Time Coordinated, shows an open at 225.99 and a high of 229.94, a huge jump from the previous day's close of 211.35. This large white candle, accompanied by extremely high volume, confirms the market's enthusiastic response to the favorable legal outcome. The subsequent hours show some volatility but maintain the higher price range, indicating strong buying pressure and a clear shift in market sentiment. The price consolidated briefly above the 227 mark, which now serves as an immediate support level. This period of initial price discovery after the news is crucial for understanding short-term momentum. For day traders, recognizing this initial powerful move and the subsequent consolidation offers potential entry points with tight stop losses. The ability of the stock to hold these gains in the hours following the news confirms the strength of the bullish sentiment. Any retest of the gap up low, around 211, would be a critical test of this new support. Now let's switch to the 1-hour chart for the most recent trading days, covering September 2nd to September 4th. We can observe that after the initial surge, Google has been trading in a relatively tight range between approximately $227 and $232. This consolidation suggests that after the initial explosive move, the market is digesting the news and establishing a new equilibrium. The price repeatedly tested resistance near 232 on September 4th, but failed to break decisively above it. Conversely, strong support appears to be holding around the $227 level, preventing further pullbacks. The volume during this consolidation is lower than the initial surge, which is typical as momentum stabilizes. A break above 232 would indicate continued bullish momentum, potentially targeting higher resistance levels. A break below 227 could signal short-term profit-taking and a retest of the gap-up zone around $211 to $215. Traders should watch for candlestick patterns like engulfing bars or hammers near these levels to confirm potential reversals or continuations. The slightly wider range on September 4th suggests some distribution or profit-taking after the initial excitement. Moving to the 15-minute chart, let's examine the very short-term price action from September 11th and 12th, the latest available data. This granular view reveals intraday volatility and specific price levels relevant for quick trades. On September 11th, we saw price attempts to rally towards 242, met with resistance, leading to a pullback to the 237 to 238 range. This demonstrates how quickly intraday sentiment can shift, even within an overall bullish daily trend. The support around 238 to 239 was tested multiple times on September 12th, holding firm initially. However, towards the end of the day on September 12th, price dipped slightly below 240, finding tentative support just above the 239 mark. High-volume spikes during these dips could indicate institutional buying stepping in, preventing further declines. For short-term traders, the 239.50 level could be a minor pivot, with moves above suggesting a retest of 241 and moves below targeting 238. The current range-bound movement on this time frame requires precise entries and exits, often relying on quick scalping strategies. Keep an eye on volume during these intraday movements. Unusual volume often precedes significant price action. To recap, Google is currently in a strong bullish trend, largely driven by the recent antitrust ruling on September 3, 2025, a monster win that removed a significant market overhang. Key long-term support now sits firmly at the approximately $211 to $215 gap-up zone, a level unlikely to be retested without major negative news. Immediate short-term support is observed around the $227 mark, with resistance near $232 as price consolidates. For bullish traders, a decisive break above 232 on strong volume would likely open the path towards new highs, potentially aiming for $245 as suggested by some analysts like Daniel Ives. This scenario is highly likely, 70% probability, if broader market sentiment remains positive and no new regulatory challenges emerge. Reasons to be bullish also include Google's continued advancements in AI, such as new hires at DeepMind, which provide long-term growth opportunities. However, bearish sentiment could emerge if Google fails to hold the $227 support, leading to a retest of the $211 to $215 gap. A break below this critical gap could signal a more significant reversal, potentially pushing the stock back towards the $200 level, a moderately likely scenario, 30% probability, if regulatory scrutiny, like the Penske media lawsuit, gains traction or if broader tech market weakness occurs. For longer-term investors, monitoring the outcome of legal challenges and Google's AI integration strategy will be crucial for sustained growth. Watch for any news regarding future regulatory actions or major AI product announcements, as these will be significant catalysts. Always remember to manage your risk carefully, using stop losses and position sizing appropriate for your trading style. The price is currently near an all-time high, indicating strong momentum, but also potential for profit-taking. In the short term, pay close attention to the $232 resistance and the $227 support on the hourly and 15-minute charts. On the daily chart, a clear close above 235 would reinforce the bullish outlook, while a close below 225 would suggest caution. Stay informed and trade smart, and we'll see you next time on Explain the Charts.